Alphabet reported earnings after the market closed on Wednesday. Stock's actually down a little bit, as you can see here, down about 1.6%, about 20 minutes after the market closed. Results just came out a few minutes ago, but I wanted to go through my initial reactions because this is a company that I think is one of the most undervalued in the market today, trading for less than 20 times earnings, and yet they can't get any credit for the fact that search continues to grow. YouTube is growing. This is one of the best businesses in the world, growing revenue, investing heavily, and I think they're bludgeoning the entire AI ecosystem with their cash flow and their balance sheet. I'm going to explain exactly what I mean there. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube, and if you like what you see, check out Asymmetric Investing. There's a link on the screen and a link in the show notes to my newsletter. That's where I've got more in-depth coverage. I also have my asymmetric portfolio there. That's a portfolio that I built from nothing, absolutely crushing the market since that portfolio began. And Alphabet is one of the stocks in that portfolio. It's actually one of the underperformers, but I think long-term, this is going to be a phenomenal bet for investors. Also want to thank this video sponsor, Fiscal AI, fiscal.ai/ASYM. I'm going to use Fiscal AI throughout this video. Look, it's 20 minutes after the market closed. They already have their key performance indicators updated for Alphabet. Just an incredibly impressive platform. If you like what you see, go to fiscal.ai/ASYM. You can give it a try. Their pro version for free for 2 weeks, and it's 15% off with that link. If you like what you see, this is a product that I'm a paying subscriber for. So can't say enough about Fiscal AI. All of the financial information you need, transcripts, insider buys, everything all in one place. Well, let's jump to exactly what's going on with the stock right now. Still down about 1.5%. And I'll start with the press release here. They just go over the high level numbers. Just incredibly for a company of Alphabet's size. The revenue was up 14%, 13% in constant currency. So there was a little bit of tailwinds from a weak dollar. Operating income up 32% from a year ago, $31.3 billion. So over $120 billion operating income run rate. Net income, $28.2 billion or $2.31 per share. Here's all of the segment results, and this is actually where I'm going to pop over to Fiscal AI. This is all of their segments stacked together. So you have search in blue, YouTube ads in orange, purple is the network business, subscription platform and devices is in green, and then Google Cloud is in red. So you can see there's just steady growth with all of these businesses. So you add them all together, just phenomenal results. And this is one of those stocks, it's very, very cheap, but just continues to grow quarter after quarter. The story in the market is that they're going to be disrupted by artificial intelligence. ChatGPT is going to kill the search business. Guess what? The search business doing phenomenally well. $208.3 billion in revenue over the trailing 12 months. And I'll switch this over to the quarterly numbers, but you can see $54.2 billion in revenue for the quarter. That was up from $48.5 billion a year ago. So about 12% growth in search. Is search dead? We're not seeing it in the numbers. I just want to reiterate, that is what's incredibly impressive, is that you're not seeing any sort of weakness in their numbers right now. The other one that's going to get a lot of attention today and from the market is going to be the cloud business. In blue, we have revenue from the cloud business up 32% from a year ago. So that's 28% growth in the first quarter, 32% in the second quarter. So accelerating that growth number, you can see how the growth, you can see how revenue just kind of picks up in the quarter. So we'll see if that continues. I'll get to their CapEx numbers in just a second. Just an absolutely crazy amount of money that they're spending to build out this business, but it's also pretty profitable. That operating income margin continues to go up. So these KPIs are telling us exactly what we want to see, and it's heading in the right direction for Alphabet. They're not going to be blowout numbers. We're not going to see 200% growth like we were in NVIDIA a couple of years ago. But this is really phenomenal results from a company that the market seems to think is going to be disrupted pretty soon. I wanted to go through a couple of things from their slides. This is services revenue and operating income. So this is a bunch of the segments that I just talked about. But you can see phenomenal growth for the Google search. That's going to be in red, YouTube, Google Network, and subscriptions. They actually bundle all those together and then report the operating income for that entire segment. So the operating margin is remaining about 40% for that segment. Google Cloud, I just highlighted, but this just shows how much that operating income is increasing year over year. Here's the crazy one that I wanted to show everybody. Capital expenditures in the second quarter of 2025, $22.4 billion spent on capital expenditures. Just an astounding amount of money. And this is where I think and this is their cash flow numbers. You can see here's their operating cash flow. you subtract the CapEx, you still get free cash flow of $5.3 billion. So who's going to be able to build out AI and just bludgeon everyone else with the amount of money that they're spending? Alphabet, I think, is going to be that company. That's what I'm seeing here, is that as Oracle makes a partnership with ChatGPT or OpenAI, they're talking about spending billions and billions of dollars. Guess what? Oracle has a terrible balance sheet. They have $90 billion worth of debt. Sure, they can build out more assets and more capacity for OpenAI, but Alphabet's doing it with the cash that they already have, and they still have cash left over. They don't have to take out debt to be able to make massive, massive investments in infrastructure and artificial intelligence. So we haven't gotten to the conference call yet. That will be starting relatively soon. But the early numbers, this is just telling you that they are saying that we're going to invest more in CapEx, and more in AI talent, all of that, than anyone else possibly can. And that's how we're going to win this race. So look, at the end of the day, Alphabet stock trading for about 20 times earnings. You can see that here, 21 times earnings, according to Fiscal AI, on a forward basis, 20.3. So we'll see if some of those estimates change. But the business is doing extremely well. I don't think there's many flaws. We'll see exactly what some of the details and what the questions are in the conference call. I'll be back probably later this week to cover that. But I think this was a phenomenal report. And if you're worried about search being disrupted or the company's golden goose being lost to a company like OpenAI, we're not seeing that in any of the numbers right now. And that's what I like about Alphabet. That's why I'm so comfortable with this as one of the biggest positions in the asymmetric portfolio. So let me know what you thought about the results in the comment section below. Don't forget to subscribe to Asymmetric Investing here on YouTube, and also my new newsletter. Like I said, link on the screen and a link in the show notes if you want more from me. Thanks for watching, everybody. We'll see you here next time.